Good afternoon, everyone. I think we are back on here. We are live. Yes. Welcome. Happy Friday. Congrats. Made it through another week, a tumultuous bit of week in the markets. I am back. Interesting week. Some stuff I really didn't even change here in terms of the year-over-year look back. It was pretty interesting. And obviously, some risk-off stuff happened this week. Obviously, the tariffs were implemented or announced yesterday that President Trump is pretty much going to put the tariffs on everyone, but this isn't a political show. But I did want to get back to, so my last video was on the 18th, and I said, what is going to take this Goliath market down? And look at the charts. And I said, this should be going back to about 616 to 618 in SPY. It ran way past my estimates. We'll take a look at the charts, like I said, but we got as high as 640 in SPY, and then a quick, drop after, of course, some big earnings moves too from Amazon as well. So let's get in the doc first, and let me see if I remember how to do this. Alrighty. But thank you for joining. If you like what I have to say, do subscribe and do all that stuff. We're going to recap the day, the week, and the year's best 3 trades. I try not to miss a Friday show. It's very helpful in my trading. All right, so what is this guy pondering here? Bitcoin had a little bit of a drop this week. We'll take a look at it specifically through the BITO ETF. Really, that one has a different kind of borrow versus an IBIT. IBIT is best in show, but BITO did have a significant fall this week. We'll take a look, and that's why this guy is pondering here. Also, the biotech space, specifically Ark Genomics, had a fall off. So again, the risk on stuff came off this week. You'll see a bit of an exit from Ark, Bitcoin, and the Genomics, as I said. So today, Bitcoin, large cap growth, and the Qs all lower by 2%. They got smacked pretty hard. Again, BITO was the proxy I was looking at there. Large cap growth, we'll take a look. And then QQQ, of course, when you have Amazon moving like it did, Qs are going to drop significantly. So that was a 2% drop, and volatility and gold rose. They continued to buy gold. That thing was up 2%, and vol was up handily. Massive volume today in SPY, over 130 million, much of it in the move in Coinbase and Amazon. But there was a lot of trading under the hood today as folks couldn't wait to get to the bell. And then this week, characterized by 8% declines in ARKG. That tracks somewhat with the IBB or the and the XBI, but they took off their foot off the gas in Genomics. We were trying to see a level if this would hold, and the biotechs I thought would really, really rip along with the rest of the market and deserve a chip like the rest of the roulette wheel that has become the market as of late, ripping towards new highs. We'll take a look if that thesis is still intact, or if, as I suspect, ARKG got exactly to that line where it had to defend likely a 200-day moving average, either steady or falling, and probably got there, meerkat, and then fell off. But we'll see. I haven't looked at a chart in a little bit. And then, like I said, BITO also fell, and ARK. So these are absolute risk-on stuff that have been up. Specifically, BITO and ARK have had amazing years, and they sold some and took some profits. Okay, so let us see if we do this. Let us get to the screen, and first go through the panel. It might be a little bit slower today. I do have a monitor down from the storms and whatnot, so just bear with me here. You might see a little bit more of my tan face than usual, but I'm here nonetheless. All right, so some big moves. SPY down 1 2/3%. We'll take a look at that chart. Qs we already aforementioned down 2. NVIDIA down 2. Tesla down 2. Amazon down 8%. Absolutely massive move after they had kind of a gloomy, I think is that what they described it, a gloomy profit outlook for the next quarter. Apple down 2.5%. Things still looks like crap. $202. Microsoft down 2. Meta down 3. IWM small caps down 2. AMD down 2.5. Coinbase down 16.5%. We're not gonna have time to look at this chart today, but Coinbase to me was so, I don't want to say inflated. It's a great stock, but I had said for numerous times that the stock could easily just go down significantly, a move like this. And it finally happened today. There looked to me in the chart so much air underneath in Coinbase. Still a great stock, much better than, say, an Apple in terms of trading, but not totally shocked in a week, especially where BITO was not trading well. Also, in my video on the 18th, I said we're going to get this kind of a move in BITO, and it would take it down to, I didn't exactly remember the figure. I think I did say south of 115 or south of 110. People are going to get freaked out and say, "Oh, that's it. Is that the rug pull?" And it won't be. We're at 113 here. United Healthcare continues to be probably the worst stock in the market, down 5%. Palantir down 2.5% to 154. So I think still a stallion and probably one of the best stocks in the entire market, along with Microsoft and Meta and Broadcom. Strategy down 9%. Like I said, crypto got hit hard today and this week. Just, a little bit froth off the top. I wouldn't see it as significant concern. Even the mighty Robinhood down 3%. Google down, just about 1.5%. And Broadcom, as I said, down 1.5%. Bonds, we will look at bonds rip today, depending on where you were at the curve. But a nice move. They bought bonds as they did buy gold, flight to safety type moves. All right, so today, really fast, in terms of the intraday move, here we open. Of course, there was a jobs number as well, pre-market, and then the announcements last night from the earnings. It was ugly from the get-go at 10 o'clock. They sold it off. Then we had some nice strength here towards noon. We actually got above VWAP, and then we started going lower. The actual low came at 2 o'clock at 619 SPY, and our VWAP was pretty much 622 even, and then we rallied to that from 2 o'clock Eastern time all the way to 4 o'clock, a rally from 619 to 622 or VWAP. As I zoom out here, so kind of a complicated picture, to be frank, and the dates can always change. There is a bit of art and science to this, but the bearish accumulation phase, the market. So let me zoom out here. If you can see this top. So we are anticipating a market. Let me just go back here on the charts here. Hopefully everyone can see this. So we basically, I'll cut to the chase. The 25th, I was seeing for a bearish accumulation phase to end and a bullish accumulation phase to begin. That didn't happen because instead the market continued to climb here into the 31st. So we had to update our count when I got on my computer a few days ago. So really, I kind of have the 30th, and you look at this candle. We ended up closing down 40 bips a day after reaching 640 in SPY. So I'm actually I have a calendar here that the highs are on the 30th, where I'm marking the dates from. So which suggests about a bearish accumulation phase about on or around August 15th of about 626 or so, 628, right around there. Of course, what happens? Sometimes it makes a week's worth of moves in 2 days. We went from above the upper Bollinger Band to now almost the bottom Bollinger Band in 2 days. We went from 640 to 620 in, again, I hate to say it again, but 2 days. And we're actually, if you get a little bit of warning signs, we're actually the lowest RSI in SPY since April 23rd, which is when the surge really started to begin here after the 52-week low from April 7th. So a little bit of precarious mood in the market. I will take a look. Again, you're coming off all-time highs 2 weeks ago, but the weakness that it has shown has been extreme. We were at, again, 71 RSI just a handful of days ago on Tuesday, and you're at 47 RSI now. So this is not a glitch here in the model here. So what to expect for the next 2 weeks? More bearishness than bullishness. I still think we base and we hug right around that 627, 628 mark. This to me looks a little bit overdone. I wouldn't immediately scoop it though to just immediately expect a 1% move up. But it does look like there's going to be more pull up than pushed down, if that makes sense. I'm just looking at risk and levels, risk reward here. I do think we're going to be hugging that 620, that 20-day moving average right around 627. And 627 is pretty meaningful to me. I don't think we give it up too much. Although, again, like I said, this weakness, last time we even saw this, the stochastic momentum index is still sailing. This thing has not even come off for air. You're basically a stallion on the treadmill here from May 12th, and trees don't go to the sky. And this has had an amazing reading for 3 months, kind of like similar to the run we had here. Then we took a pause going into election day. So pretty normal. Like I said, just we'll see what happens here. Again, I do want to point out the divergence here. Yesterday's all-time high, we got to 640, but what was the RSI? 64. Whenever that happens, like I said, we had it back there too. Where was it on the 18th? And I'll quiet after this. We got all-time highs here, but you didn't even get to 69 in the RSI. Then again, what happened? We trugged along for another week and a half to all-time highs, and then we got the rug pull, a multiple standard deviation move in the Qs, for example, dragging us down. So all in all, I don't see us really falling apart. In terms of risk levels, I don't really see us going below 610, which is another 2% to the downside. So it did a lot today, in my opinion. But it can always get scary when people just think the market's going to always continue to go higher in perpetuity. I hope I don't give those kinds of signals. But I mean, when I see a chart like this with a rising 200-day moving average and everything like that, I mean, again, your ultimate support back here is at 590. I don't think you'll be that lucky. Again, I think the worst that this gets, the sell-off over the next 2 weeks or so, is 610. And I do think we're tethered to about 627. And then probably towards the end of the month is where I would think we get towards those 640 levels again. We will see. I know there are some talking heads saying if I was a betting guy or gal, I bet we don't see those levels for quite a while. We'll see. I think it possibly happens end of the month, although August, Jackson Hole, a lot of bullishness usually doesn't happen. Maybe it comes into September, Labor Day, and the end of summer. But I still think it's going to be at least several weeks. I don't think we're going to get there in 2 days. All right. Let's see what we have here. Let's get to the doc. A lot of things happen, like I said. Let's get to it. All right. So first, the gainers of the day, there obviously were not a ton. It was volatility, VXX registering a multiple standard deviation move. VXX, I use this, of course, for my forecasting. It's basically an inverse, more or less, of the SPY. But let's look at the chart here. So VXX did actually put in a new 52-week low when we put in those previous all-time highs on the 29th. VXX actually printed 40.46, and that is a new 52-week low. And then immediately it started to spring 10%. Basically, it got oversold to a true. I mean, look at this. It was a RSI of 24 the day before its 52-week low, and now it's gone back to about a 51 RSI. It hasn't been here. This is important, in my opinion. I know VXX doing charting, again, I always say it on a non-time series, it can get a little complicated, but it's interesting to me when volatility becomes bid above 50 RSI. We haven't been there since mid to late April. Again, the chart is giving us vibes. SPY also in terms of the stochastic momentum mix. It's RSI back to where it was in mid to late April. After that, the real scare, into Liberation Day and everything else going on with the tariffs. So you don't like to see SPY break below 50 RSI. You don't like to see VXX break above 50 RSI. It basically lets you know there's a little bit of a shift underneath. In terms of what happens now, yeah, I think, like I said, I don't want to really put my foot on the gas in terms of SPY. I think VXX has a bullish accumulation phase for about the next 10 days or so. This looks like it wants to get and make a move towards about 48. I don't think it has quite enough to get towards the 200-day moving average at 50, but I do think it has enough to get to 48, which is about another $2 move or so, another 4% to the upside. So I think vol will still continue to be bid in the week or two, week and two ahead. Alrighty, and there was really only one other thing that was bid today, and that was the GLD. My gold bugs out there enjoying a 2% gain, where there are not much gains to be enjoyed out there in the markets. Again, gold, it's interesting. Gold's all-time high was back in April. Similar, what were we just talking about April? The vibes in the market. We're back to where we are in terms of RSI. Is gold doing any kind of a trend change? Not really. 53 RSI. Really, really range bound, to be honest. The GLD from 318 to, I guess you have to give it that, 290. And that takes you all the way back to April. I think this base is this week. This, to me, is still a star story. I look at the GDXJ and the outperformance it has with the equity exposure plus the gold. I think this base is right here. I'm looking at a level of about 300 even. You're lucky if you get it around there. I don't think you do. And I think this starts to get and hug and tether right around 307. Good to see here at 310. I had a nice surge today. Like I said, $6 or 2%. And I do think this heads towards about 315 in the next 2 weeks. Again, they're going to take, in my opinion, their foot off the gas in terms of beta and market stuff. We'll take a look at that as well. I do think they bid up gold to the tune of getting very close within, just a few dollars, within 1 to 2% of its all-time high struck in late April. So I think if you're a gold bug, you're going to have a nice 2 weeks here. And I think the move pretty much began this in the past 2 days and really started to cement itself today. I think you have a nice 2 weeks for gold. Okie dokie. That's what the chart's telling me. Next, let's look at the losers. There have been some. BITO, we're looking at losers on the day. BITO down 3 1/3 today. Just let me see this because BITO is kind of a loser ETF. I love IBIT, but IBIT didn't register a multiple sigma loser today, although it was down the same percent. So let me still go to BITO though, because that really did register a loser. This has had, we're going to again stick strictly to BITO. So this ETF peaked back here. This isn't like recent Bitcoin performance. These guys also have a fat dividend. If you own BITO, this has like a 50% div yield. That's pretty crazy. You get a massive amount. It's right there. How much do you get in dividend? 55 cents, I believe, every month. So 55 cents. And there you go. That's a pretty crazy yield on $21 stock. So yeah, so BITO has been ugly. It's been really trying to have a resurgence of its own since May 8th. But, with stops, fits and starts, I would say, versus, actual Bitcoin futures. I think this base is this week. I like it around this 2175 level. I think this is a little bit overdone, to be honest. As I always say, watch how Bitcoin trades this weekend. I think it might get uglier before it gets better, but I do like your risk reward here. I mean, if you could enter this at, to be really frank, 20 half, I like it even from here. Maybe it does get to 20 even, which is another downside of 3%. Possible it did that today alone. But I do think Bitcoin, actually, it's going to take a little bit, but I do think it has a nice 2 weeks with gold. I think digital gold, a la Bitcoin, and physical gold enjoy a nice 2 weeks when folks rotate, again, kind of vibes. I think I saw that today, a post from JC, rotation is just vibes, vibe feeling. And it's kind of true. You're just really going on the wheel. I think they're going to bid up Bitcoin and gold over the next 2 weeks. I think you're kind of getting a gift here in Bitcoin. This looks like it'd easily shoot up, $1.15. I think it's going to have a nice 6% move over the next 2 weeks. All right. I know it's not a lot for Bitcoin, but there you go. But they did shellac it today. It's going to take time to base with this 20 handle. And I do think over the next 2 weeks, I do think this actually does get to a 23 handle for BITO. Next. Thank you. Next. Thank you. Next. It's from Weird Al. Okay. SCHG, large cap growth. There's a couple proxies to look at this today. I am going to look at what registered a multiple standard deviation move. This was the Schwab ETF, very similar to Q's, so I won't belabor this one. All the charts look the same, similar to SPY as well. Here, at least, the RSI got to 71 yesterday, and then look at that. Boom, a quick fall to 51 RSI, which it has not seen since late April. And again, when the surge really started to happen. Kind of a mixed chart here, like S&P, more bearish than bullishness, I would say, over the next week and a half or so. But really, I like it right around 29.70 here. I don't hate your risk reward. Potentially goes down a little bit lower to about 29 even. Like, so another, again, 2% downwards. But I do think in about a month or so's time, you are still looking at 30 even. So a tougher trade for large cap growth. And then, of course, let's look at what everyone else has been trading. QQQ, multiple standard deviation, two standard deviation moves today, down 2%. Again, I love the best performing ETF of all time, with a more realistic CAGR or compounded growth than Bitcoin, because just off the charts is that. But QQQ since inception is how people get rich. When you were a kid and you talk to someone and said, how do you put money in the markets and how do you get rich? They're like, oh, invest in QQQ. That's what they meant when they say invest in the market. That's Q. And Q right now is the least bid in terms of RSI since April 23rd. So something of note. A bit of a rug pull here, again, on the all-time highs. It got a 65.5 RSI, and then the next day it goes to 48 RSI, kind of like high-frequency data in terms of where it's trading in its historical range over the past 20 days versus just looking at price, which is also, of course, the most important. So what's going to happen to Qs, in my opinion, over the next 2 weeks? Again, potentially, the downside. I really don't think it gets below 550, which is $4 away, but because of the duration, I wanted to give it time to shake. And I do think folks take their foot off the gas, off of beta a little bit. Maybe they're actually digesting and seeing what these possibly mixed earnings are going to be from some of these firms as they go into different industries. And that's how you have a move like that from 575 to 551 in one day. In QQQs, and obviously the move, like you said, like we saw in Amazon. So again, the floor for me in this, if it breaks 550, potentially goes as low as 543. I still really don't think that's a 50-day moving average. I don't think it does that. It hasn't touched its 50-day moving average since the weakness, like I said, in late April. So we're getting a little bit of, like I said, those vibes from late April. I'm seeing a lot of things in the charts that look like what happened after the 52-week lows. So not seeing a very sexy beta week for 2 weeks for that, especially coming off the jobs report today. All right, and what other loser did we have? It was BITO, it was the Schwab large cap growth, and it was Qs. Let's look at the top 3 gainers of the past 5 days. I'm not going to really belabor this either, because one, actually, we already mentioned. The best gainer this week in all of ETF land was VXX. Kind of a cheat, but because it's inverse, obviously, right, in terms of what the market does. But VXX was your actual best ETF gainer, up 8.5% for that pig the week it struck its 52-week lows. Number 2, and we haven't looked at this in a while, oil. So absolutely, rotation, flight out of beta, and they went to oil. Oil up not as much as volatility. Oil up 3.5%. Oil up 3. Where am I at here? Oil up 3.5%. Are we still looking at the charts here? Yes, we are. Un momento, por favor. Which means, of course, 1 sec, please, in Spanish. Okay, so oil, USO got hit today, down 2.7, like everything else, but it's had the second best week after volatility. Going back on a 5-day look back. To me, this hit its head. To me, a nice short-term target was right there, that 80 move coming off of. So if I actually chart the move here, when we said, energies looks good for a move, it was probably closer to July 7th, when USO was really just hugging this 50 RSI right here and trying to stabilize above 200 moving average. Right here was a great trade at 73 with an 80 target. It actually kind of overaccomplished and went to 81, and boom, very quick moves. But the second best place to be this week. Don't personally like it for the next 2 weeks. I think this is kind of related to the beta trade. I think this sells off for the next 2 weeks, and this looks like to me it wants to go towards 76. I think that's another $1.50. That's not a big move. Potentially 75 to 74. I'm not totally shocked. It's been impressive trading for this group since early May. I will be frank. This move since 68 has looked nice. But I just has a higher RSI than SPY right now, although it's been, it peaked in January. And the 200-day moving average is basically just flatlined at 73.30. I'll say that is your support in it for now. I do think it starts. I don't like it from the upside for here versus the next 2 weeks. I think your risk reward is pretty crappy from here. I think it's got $2 upside and about $4 exactly downside. So 2 to 1. I don't like those trades for bulls. Okie dokie. But that was a nice mover this week. The second best trade of the week was USO after VXX. So VXX up 8.5%, USO up 3.5%. And then let's look up this one, TLT up 1.5% today. And it's had, up 1% today. And it is up 1.5% on the week to make it the third best ETFs after vol, oil, and bonds. So absolute, exit stage right in terms of, risk on. So again, this might have a little bit more to go. Again, look at the massive 200-day moving average continuing to fall at 88.80. I think this maybe you're getting some vol expansion here too. I think you get a little bit more of a move of TLT, maybe towards 88 even. It's not saying a lot. It's 40 cents or another 50 bips, but that would again make bonds rise, rates fall. But I don't think it's going to be enough to get this 200-day moving average. Bonds continue to look like trash viewed through the proxy of TLT. And over the next 2 weeks, I think this actually heads towards 84 even. Not quite new 52-week lows from late May, but very close on TLT. Woo! All right. Continuing to move on here. Okay. Top 3 losers of the past 5 days. And these really were where the alpha was in the week, shorting these guys. ARKG down 9.5% this week. Just a massive move. Today down 1%. Today it wasn't getting shellacked as much as the Qs even, but it's really had a nasty week. The worst place to be. This has really had some change recently. Again, peaked in February at $31. Then a drawdown ensued, bottomed with the U.S. stock market in early April at 17.5. And then really a resurgence, and we're talking about this at the open of the show, is biotech's an area. Can this group go far higher to new highs? That it saw back in Feb, for example. And so basically the surge here was from June 10. You got to give it time though, because the 200-day moving average is still sliding here. So it's a kind of a high vol game, and I want to see really how it can serve essentially as we get ready for the U.S. Open, use some tennis terms. And just this day, as of today, August 1st, it is not holding the 200-day moving average any longer for the first time since June 9th. So pretty significant. What I see here now, and we have the lowest RSI since that since the week of its 52-week lows. So not so great vibes. The 200-day moving average is still continuing to slide now. And I'm concerned that this old, I don't even want to really call it old support, but does it become new resistance? I think this bottoms this week, but there's volatility in this. I think this potentially goes as low as a 23 handle even. So where my cursor is, and then it's going to be choppy, but then I do think a rally ensues for the next 2-ish weeks. It's going to be choppy, like I said, and it probably takes you to 25. So I don't love those kinds of trades where it goes below the 200-day moving average and then above, and I think that's what you're going to get here. So a little bit more frustration in the biotechs. Probably not quite time. A lot of ones in the under the hood, though, that do look good, but I'd be careful of the space right here. All right, next, BITO. We already covered this one, but BITO down 9%. The second worst place to be this week after that ARKG was BITO. Again, looking at it from over here, I have a 23 handle, and right down there, a big move here, down 3%. And we already talked about our forecast for BITO, so I'm not going to belabor that again. And now let's look at the larger ARK, which was number 3 on the ETF loser list. So ARKG down 9.5%. BITO down 9%, and then ARK down 7.5%. So Kathy Wood summer, but not Kathy Wood week. She did not have a good week. So ARK, like I said, down, what did we just say? 7.1/3%. These guys hit their highs July 21st at $79 and a quick fall to 71. Again, this is going to base right here. This to me is still strength. I love the fact that this is holding. It's kind of its former breakout. To me, if this is holding 68, again, ugly RSI here, ugliest it's been since the late April as well. Your support, really, ultimate support is 200-day moving average at 58, all the way back here. I personally love this chart. If this continues to base above 68 to 69, which is the 50-day moving average, if it does that, I think you can get, it's going to take time, but I do think you get a move to about 75 in the next couple of weeks. But this is a superstar, one of the absolute leaders. You do always want to look to ARK, though, like Bitcoin and wallet share and wallet spend in terms of sentiment and in terms of spend. And the fact that the stochastic momentum mix is rolling over lets me think that I could expect the same thing in the S&P. And they really put their foot on the gas. This really, you can't get much more beta than this. And they've really weakened in terms of, ARK. So very notable chart. Third worst ETF in all the lands is ARK this week. I think of the bases, like I said, right around here. The low today was 70.40. They bid it up a little bit after that by 1%, down 5.5%. A massively, bad day. Obviously, it's in Tesla and other funds that got hit today. But could go lower. I personally love it if you buy it at 69 even, and this can easily get to 75, but that'll probably be more of an end of August story. All right, let's keep going here. There's a lot. That was the top 3 losers of the past 5 days. So the top 3 trades of the past 5 days in all absolute terms: short ARKG, short BITO, long VXX. So, ARKG put spreads would have paid. BITO put spreads would have paid. VXX calls would have paid. Of course, I'm talking about being long all those. Or you could have shorted ARKG call spreads, shorted BITO call spreads, shorted VXX put spreads. You get the idea. They would have hammered it. Okay, top 3 trades of the past 52 weeks, and we'll get out of here. The number one, and I didn't change a single thing on this sheet, and that's what is most amazing to me about trend following and about durable equity trends and commodity trends. We're talking about digital gold here, for goodness sakes. Top 3 trades of the past 52 weeks, and I didn't even change this. It's important to note it twice. And not only did I not change the tickers, the percents were also the same year over year. So from July, and again, we're coming on the 1 year anniversary of Yen Mageddon, which roiled the stock market here and globally. Top 3 trades of the past 52 weeks. Number 1, up 78% year over year. Y'all already know what it is. I'll give you my forecast on this. The GOAT of the past year, IBIT, up 78% or more than 1%, obviously, per week. Absolute superstar. IBIT peaked on July 14th at pretty much 69.5. Had a nice bullish, it was over 70 RSI, 72. And now it was pretty choppy. And then really today, down 3%. And after yesterday's 2.5% sell-off, or I'm sorry, today down 3%. I think this basis here, I love it around 65. I think potentially just, again, you want to see how it trades this weekend. Could potentially go a little bit lower to about 62, but then I do think you want to hop in. It could be early. It's Bitcoin, but I do think 62 would be your floor on this. And I think it goes back to 65. And then probably closer to September, you get $70 target on this thing, and which is new all-time highs. We called that sell-off for IBIT in our video 2 weeks ago. And we're going to say, what takes down a Goliath like this? It was ripping past 115, 125, all that. And here it is at 113, 114K. So it happens. No earnings in IBIT and stuff like that. Just charts and just supply and demand. And that's what I'm looking at here. Look at this also. Last thing on the RSI of IBIT. Very strong, really no change in leadership. This isn't an exit like we've seen in ARK, for example, this week, even though it's still a star. Again, similar vibes and momentum to mid-April, trading below its 50-day or near its 50-day moving average. So again, it might frustrate you. Cathie Wood Summer continues. If you get this thing at $62, you're owning one of the best ETFs of the year. This is IBIT, again, that we're talking about here. And I think it probably tethers to 65, and you're looking at a 70 target. Could be in about mid-August, but I think probably closer to late August or early Sep, and that's late. That's the number 1 returner year over year. You have to allocate to IBIT. It's a question of how much. Number 2, we were just talking about it, Cathie Wood Summer, ARK, number 2, up 65%. I'm not going to kick the horse on this. Yes, get an entry here in the next week or so. If you get it at 68, I love it. Probably pops back to 75. Call spreads pop out to me in this regard. Maybe like even November's. You could do call calendars where you buy. You can, so closing price today, 71. You could buy the 71s, sell the 78s. Depends on the liquidity, of course, as well. How long you want to go out in November. You could also sell these 68 puts going out 2 weeks, and you probably get paid. But check the delta on your risk management on that as well. So like that, don't love the break on the 50 RSI here, but it's volatile. We had an 8% move in Amazon, for goodness sakes. But I like this one. Typically when this has gone to the lower Bollinger Band, it's typically been a buy. And number 3, and this is also unchanged, like I said, from the sheet from 2 weeks ago, FXI. It is stalling in terms of return. IBIT, again, up 78, ARK up 65, then FXI up 46%. And again, these guys have not broke. Last week, these guys did hit a 52-week high, a new 52-week high, did FXI. It was very nimble. We did get a 70 RSI on it, but it was very, 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 just barely. It closed down 0.5% that day, and then it gave up almost 10% this week. In terms of China, the 3rd best performing ETF year over year. So, I mean, if you're lazy and you just look at the big trends, you got to own Bitcoin, ARK, and some funds get exposure to Bitcoin through ARK because they can't own Bitcoin. So if you really want Tesla and PayPal and all the stuff that she's in, you got to own, both funds. And then I would say you have to allocate to FXI right here. I think it's going to also have a little bit of pedal off the gas. I think this has a rough-ish week ahead, down to about 36 even, 35.75, right around there, another $1 or so off, about another 2% lower, similar-ish to what it did today as it goes to its lower Bollinger Band. And then I do think you will want to buy that up in terms of some RSI assessment, 43, pretty much normal ebb and flows. Just another notable thing, China has had just from the 52-week high, it's been red ever since. So the high was on July 24th, and they literally sold it off every day. Then 0.5% down, all red candles. So don't think that's over yet. I think the floor hits at 36, and then I think that's where you want to also buy call spreads. Be vigilant. Market might get testy. I don't think much has changed. I think the March to 6,900 for SPX year end is on. Summer is, August 1st is here. Go enjoy yourselves. It's good to be back. We will try and be back on Monday with more. Peace.